Okay, it is Friday, December 11th. Well, thanks for joining us. We've got 2 weeks to Christmas, 3 weeks to New Year's Day, and quite a lot to talk about. I don't think we're going to get the Santa Claus rally that we see every year. As of this moment, the futures are down almost 250 points. I want to talk about a couple of things. The pandemic, the market effectively reached the bottom about, my numbers, March 23rd. And then I track a lot. I do a lot of tracking, and so I started tracking the average daily movement of the Dow Jones Industrial Average. Recalling the Dow Jones Industrial Average is just 30 stocks, but it's a nice big view of what's going on with companies that everybody knows. That average daily movement was negative until till November the 9th, and it went positive on November the 9th and was sustainable from then. So what I'm paying attention to now is to make sure that that moving average on the daily Dow movement stays positive and see how long it goes. My concern, obviously, is that COVID appears to be coming back. I know in Kansas, I looked at the numbers yesterday, the 3 highest days have been since November 22nd. One was November 22nd, then December the 2nd, and then December the 8th were the highest reported days of incidence. So my concern is that that's going to grow, and can we cut it off before the vaccines hit? So we're paying a lot of attention to that because we talked before about a possible second dip that's still out there. The Dow Jones closed above 30,000 on November 24th. Of the last 12 trading days, on 6 of them, it closed above 30,000. Last night, it closed at 29,999.26. At the beginning of the year, I gave the Dow Jones number at 30,000. I thought we'd make that for the year. We've done that. Now it's an issue of can we hold it for the next 2 weeks? I gave the S&P a top of 4,000. We are not going to make that, but we'll be coming up with our numbers for 2021 in the next 2 or 3 weeks, and we'll talk about a calendar here at the end of the program today. So this is how the Dow's been moving. I've got for another 2 weeks that black line up and down that shows the election day and shows that we've had an increase. I'm going to go into a second how much that increase has been, but you can see that the market was sustainable. And recall that we talked about 76% of the time the market goes up between an election and the end of the year. This year is going to be no exception. And that is regardless of whether the Democrat, Republican, or the Whigs got in. It just doesn't matter. So about 76% of the time. And I think we talked before, the market just likes stability. It doesn't like the unknown. So that's a lot of the reason for the market to kind of stabilize and go up. And then part of that is always supported by December Santa Claus rally. So we kind of had our Santa Claus rally a little bit early. So next one, Mallory. And then here is, I wanted to focus in, kind of come in a little bit closer and look at Labor Day to today. So back there on the left-hand side is Labor Day. The black line, that is vertical, that again, that's election day. And so that gives you a really close look at what's happened since the election. There are a lot of pundits out there, some professional, some amateur, that were convinced that the market would collapse after the election. That's not true. It hasn't happened. It has leveled off. We had an increase go up through a couple of days ago, and the last couple of days we've had a decline on the daily movement, and that's kind of brought our 7 and 14-day movement flat. So I think the next couple of days are going to be kind of important. I don't think it'll go down far enough to mean that we didn't have a successful year in general and a positive year from the election out. So I think we're just going through some normal market swings right now. Unemployment, that kind of caught us off guard yesterday. We were expecting about 750,000. We got a really big number, 872, I think it was. That's a little bit concerning for a couple of reasons. Number one is that we talked about October, we had that huge housing start bump, which I talked about, April, October housing start bumps. And what you see for housing starts are skilled labor. And those are folks that just have, like my dad used to say, I can't nail 2 boards together and have them come out straight. The skilled labormen are incredible. So they're the ones that go to work after the roof goes up, and their work continues. The reason October is good is you get houses under roof, and then you get the skilled laborers in to do the finished carpentry and put the walls in, the flooring and all that. So that was kind of what surprised me, and with the housing start being so high that we still had this bump. I don't think, I've got to see the numbers and they haven't come out through yet. where all that's coming from. I don't think it's the airlines. I don't think it's, some of it's retail, but not that big of a number. What it does indicate is that some more people are being laid off and some work staffs are being reduced. So that is a little bit of a concern, and we're going to be taking a close look at that. That number was really high. Now, remember, the government put these out, they do a survey, and then they'll adjust it next week and they'll adjust it the week after. And the numbers that we had yesterday are for the week before. So what we're seeing is the week ending, December the 2nd or so, and we'll have to see how that goes. But it is something we need to pay attention to because if it goes up again, you're going to see that moving average start to creep up, which is really not what we want to see. So this is the world economy. Now, one of the things that I'm concerned about going forward is, number one, we talked about we're virtually in a recession. We ended up pretty quick. Recession defined as GDP, declining GDP, and we hit that pretty quick. And you can see a couple up there that are still a concern. And one of the biggest concerns I have is the UK. So there is some talk. They have had a decent week, but they're still down 12.4% of the year on the FTSE. So the potential there is for a recession in the UK to be a little bit longer lasting. You can also see that Singapore, they're still down 12.3. That's not going to have as much of an impact. And then you see Japan, that they're okay. That's a nice, good trading partner. And then you see Australia, and then Belgium at the bottom is more commodities, but that kind of helps me take a look at what true commodities are and how they're doing. But again, my concern is that if you see a recession hit the UK, and that could spread through Europe. So we're going to be taking a close look at that. Now, if you look at the bottom, our three indices in the US, you're going to see that we all are, again, we're positive for the year. That's awesome. The Dow's up 5%, a little bit and some change. The NASDAQ, again, that's heavy tech, is up 38.3. The S&P 500, which is a better benchmark for me, is up 13.5. Everybody was down this week. The week will end up down almost absolutely at this point. But all in all, not week on week, but year on year, looking back what we've done, that's pretty good. So again, worldwide, the only people that's competing with that is the Nikkei in Japan. So these are actually pretty decent numbers. This is the sector and how they did through yesterday. And the only consistent thing I can see is telecom got hit the least from January 1st to the bottom of the COVID, and it's actually performed the best year to date. And that's the only thing to be careful of there is telecom kind of did a little bit of change in the beginning of the year on what companies were in telecom and what were in consumer services and to some extent technology. So, but that's still just, 41% increase is really good. The other one is an opportunity. That's oil and gas. They're down year to date 31.7. And Mark and I have been working on some strategies where we may want to start getting back into a little bit of oil and gas. Our issue there is we want to avoid LPs and MLPs. That's a limited partnership and master limited partnerships for a couple of reasons. So what we're looking at are companies where we think are more for processing the petroleum, but transporting the petroleum, storing it, and things like that. So that red isn't necessarily bad. It's kind of an opportunity. And if you look at what they've done since the bottom of COVID to today, they're up 50%. So that sees a little bit of a recovery, and that's kind of nice to see that. And that for us is a bit of an opportunity. So here you have the volatility index. And the thing here is what you don't want to see is you don't want to see high numbers like you did back in March. You see that Pikes Peak there, and that came right in the middle of the COVID issue. And then it's kind of stabilized. You've had a couple of bumps. And again, you're showing a 7-day and a 14-day moving average on that. The gray is a 7-day moving average. So you can see that it's stabilized. We've got a little bit of a flux there this week, but that's a small number. That could be due to some reaction to, we've had kind of some odd days on the market. It could be due to the reaction that we're seeing from that high unemployment filing number last week. So it's important to watch, but it's not, at this point, it's not too bad. It's stabilized, has been for a couple of weeks. And that's something we pay attention to because that does affect the market. It does, and it kind of tells us how people are feeling. So what we're looking for is that number to be nice and small. And and everybody happy. That's where we are right now. This is, I talked last week about SWOT, strengths, weaknesses, opportunities, and threats. I'm continuing to build on that, getting ready for 2021. I've added some things at the bottom. My concern, obviously, is that we want to make sure that in this recovery, that our economy stays strong. So we have these things at the bottom. Business spending declines. That could be a weakness. Consumer spending declines. People quit spending money. The interesting part about this last 9 months is consumer saving has gone up. Consumer spending has gone down a little bit. Business spending, when they quit spending money, then that money's going someplace, usually back in their coffers. So it's kind of a spiral. It's a self-fulfilling prophecy. So they quit spending, businesses quit spending, and then they get a fear of the economy going down, and then the economy generally weakens. And that wild card is getting the virus put in check. So we've had a couple of issues they point out with the vaccine, but it appears most of those are explainable. But these are issues that we need to consider going into 2021 as far as weaknesses and threats. I think right now our strengths and opportunities remain pretty much the same. That consumer confidence, I'm tying that to volatility. As long as we keep that number down, we'll be okay. And on weaknesses, as long as the new administration doesn't start messing too much with tariffs and things like that, low interest rates, those really need to come up. In a good economy, we could get into some really advanced economics, but we really need interest rates at 3 to 4%. And there's a lot of reasons for that. So the low interest rates really are a weakness on the economy going forward. And so here's my comments on where we're headed the next couple of weeks. Here we are. A week from today, we'll be back at 8 o'clock. 2 weeks from today is Christmas. We will not be here. And then Friday is New Year's Day. We won't be here. We'll be back on January the 8th. And so after next week, we won't see you again for a couple of weeks. But that January 8th, by then we will have had time to put together our thoughts for 2021. We'll talk about where we think the Dow is going to go. We'll talk about where we think the S&P 500 is going to go. And we'll kind of have some insights to what we think our plans are going to be for 2021. And our caveat there is always, we never know if there's going to be another COVID. So when we make our plans and we make our forecasts, we're making them based on our best information. But on the Friday the 8th, we're going to talk about our 2021 thoughts and some of our planning and where we think we're going to go. That would be a really good show to invite your friends and family and coworkers in to take a watch. It doesn't cost anything. It's free. There's no advertising other than us pointing out that we're First Option Bank, and I'm Mike, and behind me is Mallory, who helps with production. And but other than that, it's free, and we'd love to have you invite your friends in. Tell them to give us a call and mention you, and count as referral. That would be awesome. But that would be a really good show to put an invitation out and say, hey, come and listen to what they think about 2021, and we'd love to see some faces. Again, I want to thank everybody that comes every week, and there we go. So I want to thank everybody for coming in. We see some familiar faces that come every week. We see some new ones. That's great. We are able to see how many folks visit on Facebook, and that's super to see. And once again, extend to Mallory. She's got this down, and I just walk in at 7:45 on Friday morning, and she's got me ready to roll. So she's been awesome putting this together. If you have any questions, please give us a call, 913-259-2110. We're happy to answer it. Have your friends give us a call. We don't charge to visit with anybody. And we will see you again 1 week from today. Everybody be safe, get ready for Christmas, and take care of yourselves. Thanks for joining us.